Big money just poured $211 million into spot Bitcoin funds, yet your crypto gains are still sitting on a cliff. Here is why that support at 64,000 might not hold if tomorrow morning brings bad news. Thursday, August 6, 2026. Like and subscribe for daily market updates. Today's agenda: the crypto cash inflow, market snapshot, the big picture, oil deal drama. Up next, market snapshot, the big picture. Big money is back in town. Spot Bitcoin funds pulled in about $211 million in a single day yesterday. That buying pressure pushed the price up to 64,786, which is plus 0.28% today. BlackRock led this charge, but you need to ask yourself, does this demand shift last? The short answer is no one knows yet, because yields are still hovering near 4.62% on the 10-year note. Why did Bitcoin rise despite a flat Ethereum at $1,907.89? Because risk assets often move together, but crypto can diverge when institutional cash flows in. This matters for you if you hold digital coins, because it suggests buyers are stepping up to defend this level. However, the ceiling is real. If yields break above 4.8% tomorrow, Bitcoin will test $64,000 support again, because that acts as a real ceiling under current central bank policy, stance globally speaking across borders worldwide, including small businesses struggling with debt service. Payments monthly due dates approaching quickly soon. My bet is we hold here for now, unless the 10-year yield spikes. Follow so you don't miss tomorrow's number. But what about the energy sector and that looming deal near Hormuz? Let's look at where things stand right now across all the major assets. Bitcoin is up plus 0.28% to $64,786.00. Ethereum is flat, sitting exactly at $1,908 with a tiny bump of plus 0.5%. Gold climbed 3.36% today to $4,321. That move makes sense because investors are looking for a safe place to store wealth, while the dollar index stays steady around 99.74. Up just 0.07%. Oil is tricky. Brent crude sits at $75.20, after West Texas Intermediate slipped slightly down minus 0.03%. The Nasdaq gave up gains today, dropping 8.33% to 26,363 points. The S&P 500 joined the Dow in record territory though, climbing as Trump says Hormuz deal is close. Why did stocks split like this? Because tech earnings drove the rally, while oil prices weighed on energy-heavy sectors. You need to watch these levels, because if gold keeps soaring past $4,320, it signals fear that inflation might be higher than expected or rates will stay high longer. That brings us to Federal Reserve rates stay steady. Do not celebrate peace yet. Crude stays low at $79 for Brent and $75 for West Texas Intermediate. You must stay alert because no treaty is signed by Friday's deadline. Energy markets instantly price in global political risk premiums if Iran delays implementation or adds obstructions. Fuel costs can spike overnight as supply chains tighten. Remember how oil prices plunged after Trump called off strikes earlier in August. That relief was fleeting, while uncertainty returned to complex pricing models used by major traders and hedge funds alike. History shows that whenever the strait is threatened, even without active conflict, premiums widen rapidly because insurers and refiners demand higher margins. My forecast says crude will likely climb back toward $80 per barrel before Friday closes if Hormuz talks stall tomorrow morning during critical diplomatic windows. Rising energy costs eat into operating margins faster than most can adjust pricing strategies without losing market share to competitors. This hurts small businesses already struggling with mounting debt service payments as monthly due dates approach. Conversely, if the deal holds firm and tensions ease, oil stays suppressed, while stocks might rally further on renewed hopes for rate cuts following a soft jobs report next week. That could signal slowing inflationary pressure from commodities. Any sign of drawing down reserves due to fear of supply shocks will trigger immediate buying in futures markets regardless of headlines regarding peace talks. You must watch inventory reports closely. Traders act instantly when fears rise. The real story isn't just whether war starts, but how quickly financial institutions react to whispers of instability that can move prices by several dollars within hours before official statements are released. Finally, let's look at crypto-specific risks and why Solana might be the next big move for you. The Federal Reserve kept interest rates on hold today, This move signals deep-seated anxiety over persistent inflation despite strong headline numbers. Was this pause merely administrative? No, it was a strategic defense against wage price spirals in services and housing. By maintaining the current stance, the Fed acknowledges that premature cuts could reignite price pressures before they are fully tamed. Consequently, immediate friction hits agriculture and small businesses now. These entities often operate on thin margins, where borrowing costs must drop to fund operations or manage debt rollovers during lean seasons. When rates stay steady, while demand weakens, cash flow tightens just as available market cash needs peak. This could force consolidation among smaller players who cannot access cheap capital. Financial markets reacted with a nuanced mix of relief and caution. Bitcoin rose 0.28% to $64,786 today. Ethereum remained flat at $1,907, up a fraction of a percent. Oil prices saw Brent rise 0.24% to $79.64, while crude oil dipped a fraction of a percent. Gold climbed up by 0.36% to reach $4,320 today. That drop offers temporary respite for fixed-income investors seeking safety in bonds or gold. But be careful, this decline feels fragile right now. It is highly susceptible to reversal if upcoming data reveals hotter than expected inflation next week. Look at history. During the 2018 raising interest rate cycle, markets initially celebrated rate stability until supply chain bottlenecks and labor shortages resurfaced. Then yields spiked rapidly within weeks of new reports. Today's divergence widens as investors price in divergent narratives immediately. Some cheer for high-growth tech stocks driven by AI innovation. Others fear inflation elsewhere will remain sticky. This split means equity indices could climb on earnings beats, while bonds face challenges from sustained rate pressure. For the prudent investor, this environment demands a tactical rebalancing toward floating-rate assets or sectors with pricing power now. You must hedge against potential unpredictable price swings if the Fed feels compelled to change rates faster than anticipated soon. Wrap up with what matters most for your money heading into Friday's close. Bitcoin breaks out decisively on Friday. Employment data now dictates your market mood. A softer jobs report could reignite hopes for Federal Reserve rate cuts later this year. Lower borrowing costs would extend the equity rally. Conversely, strong hiring figures revive fears of sticky inflation. This warrants an unexpected September rate hike. Such a move might stall momentum just as prices surge higher. You face a high-stakes environment here. Big-picture economic data dictates crypto asset valuation relative to earnings. Isolated technical patterns matter less now. Solana dipped 0.1% down to $73.89 recently. This reflects typical altcoin behavior during uncertainty. Solana lags behind Bitcoin until the leader stabilizes. Then, it rallies aggressively once confidence returns. Capital allocation mechanics drive this correlation. Institutional money prioritizes Bitcoin for safety first. They rotate into higher beta assets like Solana next. Risk appetite must improve before that happens. Some analysts project a return above $100,000 if demand persists. This scenario hinges entirely on keeping Treasury yields below 4.8%. If rates climb back toward that threshold, holding costs rise relative to bonds. Upside potential caps regardless of network activity or adoption stories. Watch tomorrow's price action at the $64,300 support level closely. A decisive break above this mark signals renewed institutional confidence. Could it trigger a rapid sprint toward $65,800 within days? This move transforms portfolios heavy in large-cap cryptos. Missing it during consolidation phases is dangerous. Historically, similar setups lead to parabolic moves when macro conditions align with technical breaks. False breakouts often result in sharp retracements instead. They wipe out borrowed money quickly. The mechanism remains clear. Bitcoin acts as the primary available cash sink, an investor mood gauge for the entire sector. If it holds its ground against Friday's economic headline, secondary assets like Solana are poised to catch up rapidly once fear subsides. Investors must monitor this interplay closely, because second-order effects from a rate decision can ripple through unpredictable price swings metrics overnight. Minor technical levels turn into major rate change points that define weekly performance trajectories across the entire digital asset landscape. Today we saw big money return to crypto, with $211 million flowing into spot Bitcoin funds, pushing the price up 0.28% to $64,786. Gold kept climbing at 3.36% as investors sought a safe place to store wealth, while oil prices stayed suppressed near $75 due to Hormuz deal uncertainty. The Nasdaq dropped 8.33%, even though the S&P 500 climbed on record highs, because tech earnings drove gains but energy sectors struggled. My anchor call is that if yields break above 4.8% tomorrow, Bitcoin will test $64,000 support again, because that acts as a real ceiling for risk assets right now under current central bank policy, stance globally speaking across borders worldwide, including small businesses struggling with debt service payments, monthly due dates approaching quickly soon. Thanks for watching Market Pulse Daily.